Where's the glut? Says ConocoPhillips CEO Ryan Lance. This is a really interesting article. Ryan Lance recently sort of came out and has kind of challenged the prevailing narratives of what people are really calling this impending oil surplus. He was at an event, and really what he did, and I'll kind of read straight from the article here, speaking at a recent industry event, Lance questioned the notion of a glut, emphasizing that global oil demand continues to grow steadily. He argued that the market is tighter than current sentiment suggests, pointing out that the key challenge lies in sourcing conventional oil supplies in the coming years. He was also optimistic that oil prices could rebound to the 70, 75 per barrel range as quote unquote the market rebalances from any short-term supplies. These comments were actually made about 2 days ago, which sort of is in opposition of a lot of the sentiment that's out there right now. I mean, you specifically talk about things that have happened both at the IEA and internally. So think about the IEA has anticipated that world oil supply will rise by about 3 million barrels per day to 106.1 million barrels per day in 2025, leading to a quote huge oversupply that is causing theoretically these prices to fall as where we stand today. We've also seen JP Morgan Research, who I tend to kind of, I don't want to say follow blindly, but they tend to be kind of the most accurate and I think the most pared back. Obviously, we're not a Goldman Sachs company here, but JP Morgan Research forecasts Brent crude to average about $66 per barrel in 2025, which drops to 58 in 2026, mainly driven again by the supply demand imbalances and trade frictions. You know, we've seen OPEC has continued to maintain this bullish stance. They've kind of doubled down on their expectations of strong oil demand. And I mean, again, I think that we're seeing that, you know, what you see out of OPEC is they want to say demand is strong so they can continue to raise oil production without severely impacting prices. We've also seen the EIA, which is the U.S. Energy Information Administration, has sort of aligned with what the IEA is saying. They are forecasting global liquid fuels production to increase by 2.7 million barrels, so a little less than that 3 billion barrels. And they've put U.S. crude production to average about 3.5 million barrels per day. You know, we have seen steady production, refinery demand, which there is strength to bite these gluts. You know, on a long-term view, I mean, what Ryan Lance is doing is you have to put this into context. He just laid off 25% of his workforce because they overspent on some acquisitions. They didn't control cost as much. So the real question is, why is he coming out and saying this? Who's he talking to? Who's his audience? His audience isn't the analysts that are covering his stock. They're not going to listen to this. But, oh, well, Ryan Lance thinks oil is going to be $70 to $75. What he's trying to do, in my opinion, is he's trying to signal to his employees that we have a bullish view in the future and this 25% layoff is done. You don't need to walk around the hall scared that we're going to come out and do another 10%. You don't need to worry about all this. We are still bullish on oil and gas, and it's more of a signal to his company that, hey, we're still going to keep at this. We're not just going to pack it in and go home. And obviously, no one just wants to pack it in and go home, but I think he's dealing with a very nervous company base who just saw 25% of their friends go home and are wondering, are we next? And I think for now, the answer is no. Now, do I think $70 to $75 per barrel in the next 18 months is legitimate? That's the top side, in my opinion. I think, you know, I think what he's saying is correct on some levels. The market is not in a huge surplus like what the IEA says. You know, I think again the answer usually always when you sort of plot on a scatter plot all of these different theses, you've got where, you know, the IEA and EIA are, you've got where oil companies are. It probably lands somewhere in the middle. So Ryan Lance, he's a big believer in oil prices at 70 to 75.